Welcome to our deep dive into Vidya Wires Limited, a rising star in the Indian industrial landscape. Established in 1988, Vidya Wires has evolved from a small-scale unit into a prominent manufacturer of high-quality enameled copper wires and strips. Headquartered in Gujarat, the company plays a pivotal role in the power and electronics supply chain. As investors look for microcap gems with strong fundamentals, VWFL stands out due to its decades of operational history and commitment to quality standards like ISO 9001:2015. Today, we will explore why this company is gaining traction among value investors and how it positions itself within the booming Indian infrastructure story. We will analyze their business model, financial health, and the strategic advantages that could drive long-term wealth for shareholders. At the heart of Vidya Wire's success is a diverse and robust product portfolio designed for critical applications. Their primary offerings include enameled copper wires, paper-covered copper strips, and bunched copper wires. These aren't just industrial commodities, they are the literal veins of electrical machinery. Their products find extensive use in transformers, electric motors, alternators, and automotive components. By catering to diverse sectors like tower distribution, consumer durables, and the automotive industry, VWFL ensures a balanced revenue stream. Their manufacturing process utilizes advanced technology to ensure high thermal stability and insulation, which are crucial for the efficiency of modern electrical grids and appliances. This technical edge allows them to maintain a competitive position against both domestic and international players. Analyzing the numbers, Vidya Wires has shown impressive resilience and growth. Over the last 3 years, the company has maintained a revenue CAGR of approximately 20%, reflecting steady market share gains. Profitability is equally noteworthy, with EBITDA margins hovering between 8%. Several tailwinds are propelling Vidya Wires forward. First is India's massive push for infrastructure and 100% electrification, which directly increases demand for transformers and power cables. Second, the rapid transition to electric vehicles, EVs, is a game changer. EVs require significantly more copper wiring than traditional internal combustion engines, particularly in motors and charging stations. Additionally, the shift toward renewable energy, such as solar and wind power, necessitates specialized copper components for efficient energy transmission. Government initiatives like Make in India and the PLI schemes for electronics manufacturing are further incentivizing domestic production. VWFL is strategically positioned to capture this demand, making it a proxy play for India's industrial and green energy revolution. In a competitive market, VWFL's strengths lie in its long-standing client relationships and a robust supply chain. Their strength is a diversified client base that mitigates dependency on any single buyer. However, a weakness to consider is the sensitivity to global copper price fluctuations, which can impact margins if not hedged properly. The opportunity lies in the export market, where Indian manufacturers are increasingly seen as reliable alternatives to Chinese suppliers. On the threat side, the industry faces intense competition from larger organized players and rising interest rates that could increase borrowing costs for working capital. Understanding these dynamics is essential for any investor looking to evaluate the long-term risk-reward profile of Vidya Wires in a crowded electrical equipment sector. Growth requires investment, and Vidya Wires is not holding back. The company has announced a significant capital expenditure (CAPEX) plan to increase its manufacturing capacity. By upgrading their Gujarat facility with automated machinery, they aim to boost production from the current levels to over 15,000 metric tons per annum MTPA in the coming phases. This expansion is not just about volume, it's about high-margin products like ultra-fine enameled wires used in microelectronics. The management's focus on technological integration is expected to reduce wastage and improve operational efficiency. These strategic investments are a clear signal that Vidya Wires is preparing for a multi-year growth cycle, aiming to transition from a regional player to a national leader with international reach. When we look at the stock from a valuation perspective, Vidya Wires presents an interesting case for value-oriented investors. As of the latest data, the market cap stands at approximately 500 crore rupees, placing it firmly in the microcap category. The price-to-earnings ratio is currently trading at 18.5x, which is relatively attractive compared to the industry average of 25x. A debt-to-equity ratio of 0.4 indicates a healthy balance sheet with manageable leverage, providing a safety buffer during economic downturns. Additionally, the promoter holding remains strong at over 70%, signaling high management confidence in the company's future. For those looking to optimize their wealth management, these metrics suggest that the stock may be undervalued relative to its growth potential and operational efficiency. In summary, Vidya Wires Limited offers a compelling narrative of steady growth, financial discipline, and strategic positioning within India's core industrial sectors. Its diverse product range, combined with the tailwinds of the EV and renewable energy sectors, makes it a stock to watch. While risks like raw material price volatility exist, the company's expansion plans and strong ROE provide a margin of safety. As always, investors should conduct their own due diligence or consult with a financial advisor, as microcap stocks can be volatile. However, for those seeking to enhance their financial literacy and find hidden opportunities in the Indian market, VWFL serves as an excellent example of an industrial player ready for its next chapter of growth. Thank you for joining us in this analysis.